Let's put some of this stuff to Vikash Kumar Jain, right? India's strategist and head of research at CLSA, who is joining us now. Vikash, great to have you with us here. Thank you very much for your time. I mean, I think the big one came from the RBI day before yesterday with regards to their liquidity enhancement measures. First up, how important is that for the market? And do you see that as a precursor to rate cuts? Are those expectations firmly entrenched in the market now? Go on.
See, the rate cut part, honestly, is not that easy a guess because there are other elements to it as well. We need to appreciate the fact that liquidity before this move was very, very tight in many years, one of the tightest in many years. And we're getting into, a period where there is a bigger liquidity demand in the system because of taxes, etc., as we draw to the end of the fiscal year. And this could very well have been because of that itself. Does this mean that we will have a rate cut? That's the bit which is not so straightforward, in my opinion, because there are other elements like the way rupee is depreciating and the uncertainty on the dollar with whatever's happening with the new regime in the US. So I'm not sure if I can be so confident of a rate of this being a hint to a rate cut.
Interesting, Vikas, and good to see you in as always. Well, tell us, what's your overall view on the financials? How will they potentially be the beneficiary of the RBI's move and potentially rate cuts that we're looking forward to? Who benefits the most, banks or NBFCs?
If liquidity improving along with, we anyways have an opinion that sometime later in the year there could be rate cut possibilities. I'm just trying to debate whether it is immediately or not. All of that in general will be more beneficial for wholesale funded, financials. So it will be more positive for NBFCs. It will be more positive for banks with lesser CASA dependence. So that's the kind of, stocks that would benefit more at the margin from this particular action and from future rate cuts that might happen.
Vikash, what about the broader markets? We've seen the small cap index, mid cap index pretty much enter into the bear territory. It's been a fall of more than 20% from its highs. The screen is looking a lot better today, but do you think the pain is over or there is more of a correction to go?
See, there are a few things over here. Markets in general, we've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of, maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period could cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the, sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of, whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be, whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes, we have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Okay, all right. How has the market, Vikash, reacted once it sort of hits those extreme sentiment levels which you mentioned? And I remember we've in the past also spoken about whenever we've hit peaks and extremes, and what is followed next in that sense, near term.
So what we do not know about this sentiment gauge is, see, it just tells you that sentiment is at an extreme. It cannot foretell how will sentiment normalize. Sentiment can normalize by, volatility coming down, lack of activity and range-bound action. In extreme cases, that's a rare situation. Typically, it has a spike on the other direction and then sentiment normalizes. And after that, once it is not at an extreme, the index is not that useful. It can very well happen that sentiment goes to well above, close to neutral with a 5-7% rally. And then after that, it can again come back. So that's the bit which it cannot foretell. Historically, it has led to reasonable corrections. Like even as recent as November mid, we had a sentiment pullback. And from then we had a 7% rally in the following 10 trading sessions or so. So that's something which can very well also happen, even if this is not the final bottom. So that's something that one should kind of bear in mind. It just tells you it's at an extreme. How the sentiment will normalize, we will only come to know as the future plays out.
All right, Vikas, you spoke about mega caps. We know you added Reliance recently. So in mega caps, which are the safe havens in general?
So we've not added that stock recently. There were a few other stocks that we added at the start of the month. That stock has been there for some time in the portfolio. But within, in general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10-15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have in the portfolio.
Okay, all right. Now, what's the view on the IT services sector, Vikash, post all these reports around the Chinese AI startup DeepSeek and how it kind of threatens the US dominance in artificial intelligence and large US mega caps? I mean, any implications for IT services here?
See, I think there are pushes and pulls for IT. This DeepSeek event is simply just telling you the vulnerability of stocks when they are at very high valuations. So, I think that's when they are at valuations which are tough to explain. We were overweight on IT till October, and then we turned underweight. In fact, within IT, the name that we own is the most defensive of the lot. So I would say that I'm just not comfortable in looking at IT, and I believe we've already had a pre-term trade into IT after November, December, the way the sector did well. We are towards the fag end of that trade, in my opinion. That's why we are underweight on that sector, and our preferred defensive is not IT but staples.
Well, thank you very much for that, Vikash. You have been calling out for consumption to lead the rally, and that being your preferred play. Thank you very much for joining in. Bye.